Doom and gloom is coming to a city near you, and I'm not just talking about Halloween. My name is Darius.
And I'm Carmen. Do you all have your Halloween costumes coming? Because November 1st, the feds have a big decision coming out, and I hope you guys are all ready for the party.
Right. If you turn on the news lately, what you will hear talked about is high inflation, increasing the interest rates, and you'll hear how strong our job market is, and how it's going to be affected based on the conversation that happens on November 1st.
Yeah. So really, what does this mean for you? I think it really just depends on what side of the spectrum you're on. For those of you that obsess over the news and everything that's going on, you'll probably continue to tune in. But for those of us who are able to control the banking functions in our lives, we kind of look at this as just highlight reels and go, oh, what's going to happen now? We're eating our popcorn. This is me eating popcorn while I'm watching what's going on, because it's not going to significantly affect what Darius and I are doing with our own finances. So we wanted to make this video for you all today to help you realize that you don't have to be so dependent on the government and what the feds are doing in order for it to affect your pockets. All you have to know is how to control your own personal economy in order to make the correct decisions that are going to affect your pockets.
Right, because here are the things that are talked about that's going to be affected. Number one is housing market. With the increase in the interest rates, housing is going to be a little more expensive if you want to get a new house.
Yeah.
The car market. We also see that cars are becoming more expensive, especially when it comes to electric cars. And on top of that, we're going to have higher interest rates as it relates to cars. Now, what's also going to be increased is the cost of doing business. For business owners to do business, it's going to be a little more expensive. And what's going to happen is that cost is going to be passed on to you, because business owners aren't going to pay it. They're going to lay people off, and then the increased cost is going to be passed on to the consumer. So that's how we're all going to be affected by the decision that comes from the conversation on the first.
Yeah. And I mean, also, if we go back to just understanding inflation, like right now, life is more expensive. Everything is more expensive. So yes, does it affect us directly? Absolutely. But when it comes to the interest rates and that environment, we're able to take a little bit more control over what's going to happen to us directly, because we are considered our own bank. So if you want to learn more about that, then definitely click on the link below. Darius and I would love to share details on that.
Now, how can we control this function in our lives? If the feds are saying that the interest rates are going to increase on everything that we buy, how are we not affected by this? We say that we have our own bank. We create our own bank through having our life insurance policies.
Yes.
Now, what's going to happen with our life insurance policies if interest rates are going to go up on everything else? How does that affect that? How can we not be affected by it?
Well, the beautiful thing about using whole life insurance through your banking system is being allowed to have a significantly lower interest rate on the cost of money, and being able to control that environment so that really the cost, the interest that you pay over a lifetime is significantly lower than anything that's out there in the market. And so that's really what we want everyone to understand, is that if you're using life insurance as a death benefit, you're using it incorrectly, because whole life insurance, at least if it's designed properly, you can use it to replace the banking functions in your life by just allowing yourself to take advantage of the loans and the cash value that builds inside your policy. And depending on, wherever you are at the time of making this video, our loans, right now it's at 4% in order for us to pay back any of our loans. And that isn't going to change necessarily based off of, what this whole the decision between what the feds are going to do. Now, don't get me wrong. Yes, the interest rates can change, but it doesn't change as drastically as the market does, which is why we can sit back and have a deep breath and know that our whole financial environment isn't just going to tank.
Right. And you know what? Honestly, it's not just going to be the people that have their own banking functions that are not going to be affected. What's really going on here is the fact that we can control our flow of cash.
Okay.
And when you don't have control of the flow of cash, you are subject to whatever you're getting, wherever your source of income is coming from, wherever you need to borrow money in the form of a mortgage, when you need to borrow money in the form of a credit card. Well, credit cards are still going to be super expensive.
Anyway,
when you need to borrow money in the form of a car payment, those things are going to become more expensive for those who don't control their cash flow.
Yes.
for people who have control of their cash flow, they don't even have to have life insurance policies.
Yeah.
It's the wealthy people that continue to benefit from changes in our markets. And you can jump on those changes when you have the ability to do so, when you have control of your cash flow.
You know what? I think that's a huge point that I'm so glad you just touched on, because really that's the nugget. That's the gold.
Yeah, that's why we have policies in the first place, so that we can control our cash flow.
Yes.
There was a big step from us, the habits that we had when we had $120,000 of debt versus when we have $120,000 in a bank account.
Yeah.
And how we can control our flow of cash.
Exactly. The flow of cash. I'm so glad that you said that. So I hope you all understood what Darius just said. If not, go ahead and rewind us back. We'll wait. But really what he's saying is it doesn't matter what decisions the government is going to make if you don't have control of your money. Right? Because 50% of y'all who are watching our video, or not just y'all, the entire United States population, 50% cannot afford $1,000 emergency. For those people who can't afford those emergencies, this decision is going to significantly affect your pockets.
Right.
Why? Because you're not controlling your cash flow. And some of you are going to sit back and say, oh, Darius and Carmen, woe is me. You know, I can't afford this. I can't afford that. Yes, you can. You just haven't figured out the ways in which you can bring more income into your household so you're not so dependent on whatever systems you have in place right now.
Now, at this point, we probably sound like a broken record when we say you need to have 6 to 12 months for savings. Now, that 6 to 12 months of savings, for those of you who haven't done it or say that you couldn't do it, what's going to happen if you lose your job as a result of the increase in cost of doing business? What if you're one of those ones that lose your job and you don't have 6 to 12 months of saving? Next, the not having $1,000 in savings.
Oh, yeah.
The 6 to 12 months that you'll need to be able to maintain your livelihood, your basic necessities, you don't necessarily have because you didn't prepare for it. Now, inflation is something that always happens. Maybe it doesn't happen at the rate it's happening now, but it's something that always happens.
Yeah.
The feds play with inflation, with interest rates. That's something that hasn't changed. That's something that's always happened. The job market goes up and goes down. The housing market goes up and goes down. All these things that's happening happening off of a whim.
Yeah.
You know, it's cycles
it's
that
historical.
happens over and over again. Now, the difference is here and now. And what have we done up until this point? What have we said up until this point? We said to save your money, pay yourself first, have 6 to 12 months of savings, create your own business, create your own economy. You're the biggest influence in your life, not what's going on around you.
You're the biggest investment,
You're
too.
the biggest investment. Now, depending on what happens tomorrow, all those things that we said are going to be challenged. It's going to be challenged. And where are you on that position? How have you prepared yourself mentally and as far as your bank account? How have you prepared for it? Because it's always been coming. It's never not been coming. And after this is over, it's going to happen again. Things are going to get better. People are going to start doing the same thing they've always been doing after a couple years after this thing is over. And then it's going to happen again. So
yeah, it's like riding the same roller coaster every 4 to 8, every decade, riding the same roller coaster every decade, and then realize like, man, I forgot that bump back there, or I forgot that we went through a tunnel over here. It's like we ride the same roller coaster time and time again, but for whatever reason, as consumers, we are never prepared.
It's because we're consuming.
Jackpot.
It's because we are consumers. As consumers, what affect us is the changes that other people make.
Because we're reactive.
Because we don't have a choice. Because we're consuming. We're not creating. We're not on the other side of the
we're not proactive
of the product of investing and having people pay us. We are the product. We are the consumers. So as long as we continue to be consumers and not open our minds up to being on the other side of that fence, we're going to continue to be subject to the decisions that other people make on our behalf. Yeah. Because we don't own our own lifestyle.
Yeah.
When we decide to own our own lifestyle, what the feds say that's going to happen, yes, we'll be affected because food prices are going to go up. But we're going to have the cash to be able to take care of it. And that's only a certain percentage of the population. There's 70% of the people that have debt that won't be able to, that can't afford if something drastic was to happen in their life.
Yeah. And what I was going to say with that point is, as you were explaining that, I was illustrating in my head, as consumers, we're reacting to the interest rates, whereas investors are able to be proactive and take advantage of the interest rates that are being offered to the consumers.
Right. Investors are reacting also, but they're reacting differently because it's an opportunity.
Yes,
it's an opportunity
yes.
to make more money.
Yes, that's exactly what I was saying. That's exactly what it is. So again, going back to this whole thing is, where do you want to be, and why? If you continue to be reactive to whatever is happening within the government, how can you change your current economy so that you can be on the other side of this? For us, it doesn't matter what's going to happen tomorrow. We just know that we have to be proactive and create opportunities from whatever comes our way by the government.
Right. Last time we had something that drastically changed the way people worked and lived was in 2008. Now, fast forward to now, there's something else that is affecting the way that will affect the way we go about our daily lives. Now, the opportunity that presents itself is, just because you're in a certain position now doesn't mean you have to continue on this same route.
Yeah.
You don't have to continue doing the same things you're doing, because what's happening is you're a product of the experiences that you've had up until this point. The habits that you have is a result of the experiences that you've had.
Yeah.
So the experience that you have moving forward, good or bad, you can choose how you react to what is coming in front of us. Is it going to be an opportunity, or is it something that's going to leave you face down in the mud?
Well, you talk about 2008. I mean, look at COVID. The entire world shut down. We've never experienced anything like that before. And a lot of us were caught with our pants down. So how did you feel about that? And
or
what
with
did
the
you...
baby.
Hashtag COVID babies. Anybody feel us in there? So the thing that I want you to realize is that we have experienced globally something that affected the entire world. And it changed so many people's lives, everybody's life. If you weren't affected by COVID, I don't know where you were living at the time. So what have you done from that experience of 2020 that has prepared you to never be caught with your pants down again? Should there ever be another pandemic? Should the whole world shut down? Hold on. Be honest with yourself. I just can't believe this. Be honest with yourself. What have you done to make sure your butt is covered if the world shuts down again? Don't worry, I'll wait. What have you done?
Do you think anything can be as bad as a global pandemic?
No, we've seen the worst. Well, I don't know. Never say never.
Yeah, never say never.
But really, I'm having this epiphany because I'm thinking about all my friends and family who are still doing the same thing that they did pre-COVID, and then are going to wonder what to do should the world shut down again.
Carmen, I'm coming to you right now for advice.
Yeah,
what should I do?
We're done.
I don't have no money.
I got no job.
I got no job.
I don't know what's coming. I can't get no food.
Right. It's the thing is, you can't do anything with nothing. Honestly.
Powerful.
No, seriously, you can't do anything with nothing. The only thing you can do is just sit and wait. Or you can create.
Oh, baby.
Because it doesn't cost anything to create.
That's a line. You can sit and wait, or you can create.
Or you can create.
Do you realize what you just said there?
Yeah, I understand what I just said. That's why I said it.
Excuse me. Oh, man.
So here's the thing. We started this video talking about the doom and gloom that we can expect on November 1st from the conversation that the Feds are going to have about having to increase interest rates to combat inflation. And what they're doing is playing a balancing act between inflation and jobs.
Yes.
The job percentage,
Market.
the job market suggests that we have a strong economy, and that we will be okay with increasing interest rates.
Yeah.
But what happens is, as that cost of goods and services go up, the cost of doing business also goes up, which means there's going to have to be some layoffs. So what they're trying to do is play this balancing act. Now, will we be affected? There are some people that will be affected negatively by this specific situation, because the position that they're playing a position as consumers.
Yeah.
Now, on the other hand, the people that can can control their cash flow, they may be looking at this as an opportunity to increase their net worth, because what also presents itself is an opportunity for assets to be a lot cheaper than they were prior to.
Yeah.
Now, if you don't have any money to invest in the assets, then you can't benefit from it.
Nope.
So what is the position that you're currently playing? What role are you currently playing in this game? Because it's just a game. What role are you playing?
Yeah, which piece of the Monopoly game piece do you want to be? Do you want to be the sucker or the investor?
Whatever game you call it. It can be the game of life. It can be Monopoly. It can be Robert Kiyosaki's cash flow game.
Yeah,
it can be
matter.
chess. Whatever game it is that you relate to life, what position do you want to play? Do you want to be the piece on the board being moved, or do you want to be the person moving the piece? Because there's always positions that can be played. You can choose. You choose what position you play.
That was good.
Thank you.
Now, Wealth Nation, if you want to learn how to be the player in your own chess game, then go ahead and click on the next video where you can learn how to create your own banking system to control your own economy.
Remember to own your own lifestyle.
Or someone else will.